What's up, everybody? My camera is not working today, so I am low res and yellow. I hope you are going to enjoy me on a potato. So, yeah, for sure. For sure. For sure. For sure. Yeah, this is great. I mean, if you love a company, if you're very like, if you believe in the fundamentals of the company and you see the price go down, if you still believe it's undervalued, then like you gotta love that price, huh? So if you bought at any point today, if you added, or if you entered into a more leveraged option versus, not necessarily an option, but if you entered into an instrument that happens to have more leverage, in a certain direction, you know, then great. Then great. I hope that's working out for you. I am. I am the under the water meme. Yes. I am in an underwater potato. Let's combine them. Let's combine them. I'm in an underwater potato. Let's go through comments here. How can I identify a VWAP while it's happening? Good question. You can identify a VWAP. Take a few minutes. I mean, you don't know how long it's going to last, but take a few minutes. And if the price starts to just ride the 20-minute moving average, so set up VWAP with a plus or minus 2 standard deviation sort of bands on either side of it. If you see the price go up from the VWAP line and it just rides the 20-minute moving average, you're VWAPing. That's a VWAP order. How long it lasts? Usually it goes. How long did today's go? Today's went for like an hour and a half. Is that right? This one was tough because, like, okay, how would you do this trade? You wouldn't enter until it got to VWAP, I guess. Which is it 345 or 345? 945. And then it went all the way to 1056. So it lasted for more than an hour. They do chug for a bit. So I mean, do I trade those? I don't really day trade those, but that's what they look like. That's what they look like. Oh, saw, dude. Thanks, bro. What's up, Johnny? Yeah, it's party time. It's party time. Oh yeah, there is. Yep, there is a VWAP indicator. Oh, did Lady Gobble trigger? Let's take a look. Let's get her doing her thing. Let's see. On the daily? Let's see if it's on the daily. Let's close up PM a little bit here. Is it triggering? We don't have the flash yet, but let's get this. How do we turn this off? And yeah, it is red. It is red, so it's doing its thing. But we don't have the flash yet. Pretty cool to see those back to back. Nice little strong, kind of strongish finish, kind of setting up here. Green Day's not bad, not a bad look. At this point, I do not think that Richard Newton is hacked. I do not think so. It is little by little. Little by little. Let's take a look. What are we overall? It's weirdly really high on the ones with warrants expiring today. I don't know what that's about. Where does it peak? It does go up early December at this point. So something is going on there where it's thinking we have some movement. So I think that's earnings starting to be priced in. Earning stuff. Jan 16 is, I think, our highest single IV strike there. So early December. That says that's when we could expect some movement. Into next week, no. Next week is low. Next week it thinks we're not doing anything. Little chance, more of a chance going in November. OPEX last week of November, not too much. But then it goes up early December. So last week of November, first week of December, then we have a little peak there, earnings week. So that's what's being priced in. Yeah. Yeah, I know. I look yellow. I'm yellow today. I have jaundice. Guys, I'm sorry. Sorry about my jaundice. I know, man. It's wild. What can I say? I mean, certainly it's good to see us kind of bounce back up here. The way that we have. But as far as being below 2155, look great. So this was part of why I spent this time today. Doing this like extended fundamentals dive. And I think I pretty much arrived at where the bear and bull cases are getting their price targets from. So they're not making them up out of nowhere. Like really, right? You get Wedbush's price target if you just use a really conservative multiple on the core operation. If you use a 5x, and you get how we're being priced essentially at our lower bound if you use a 10x multiple, which is basically the range you see in specialty retail. Best Buy has something like a 7 to an 8.5 multiplier, which is a close competitor in some ways. Not exactly the same, but so something like that. So I mean, what you're really looking at, right? You have to say where in this whole setup here, where does the excess value come from? Like where, what's the rationale for that? Right? We know it's not just retail getting excited. We know the meme stock. We know the whole meme thing. Anytime they talk about meme stock, that's all bullshit, right? Because retail at this point, retail's trades. It's nothing like what stuff happened in 2021. It's nothing like that. Options volume is way down, but even then, we know that retail's trades are getting hit at the mid. They're getting filled at the mid. They're getting filled at the mid by a market maker, and our volume does not go onto the lid. It does not go onto the tape. It doesn't actually get processed in the market, right? It's a dead market. What we see on a regular basis is institutions and algorithms trading with each other. And whatever we do is just them taking our trades and then continuing to do whatever we're going to do, whatever they're going to do. That's what we see. Okay. So that premium above kind of this, right? So this range I established of $13.50 to $22 based on which of these multiples you're using is, any premium over that is going to be reflected in, if you approach it from a fundamentals perspective, it's going to be how you approach it from, what's your growth multiple? Like, how do you think the company is going to grow? What's your kind of forward-looking prospects for what you think is going to happen to the company over the next 5 years, let's say. And then the other sort of element is, what can you get at? How can you juice the stock, right? How can you use shares of the stock um, as tokens to like use as collateral for options? What can you expect to get from the options market? Recently, the options market has not been given us a whole lot to work with. And so, that's to be understood when there isn't a real big premium on top. It sort of falls in on itself, right? Because the more the price goes up, the more value there is to extract you know, by shorting options. And so that adds premium, which pushes it up more, which, right. Okay. But then as you go ahead and sell options, you sell, right, then the stock gets sold because market makers are then selling the stock or shorting the stock in order to hedge that position. That excess, right, that volatility premium, that options premium that's built into the share, that's collapsing. And then because it collapses, the options market collapses. Because the options market collapses, it collapses. So it gets into this kind of vicious cycle until that premium just gets, done. And if you look at weekly options, like beginning of the week, selling stuff, selling like a $25 call early, like on Monday or something, was like 5 cents or like 7 cents. That's not, nobody's coming in to buy the stock at 22 so they can sell 7 cent weekly no, that, and then let's say you bought the stock at 24, like you're not selling $23 calls, so it starts to kind of fall on itself. So some of that premium gets taken out, and that's going to affect the pricing. But then there's the actual growth multiple. Well, realistically, we still don't have we still don't have insight on what exactly the company is going to do with their money. Like they have had all of this money and they're not doing anything with it. Now that's not, they probably know what they want to do with it and they don't want to spill their hand, which, fine, do what you're going to do. But if it goes long enough without that being factored in, without something kind of material in terms of forward guidance to look at, then anything that you just kind of come up with on your own, like for example, if GameStop is one of the investor groups that buys TikTok. Somebody sent me this idea this week. Larry tweeted about it. You going to speculate that off a Larry tweet? You going to build a growth multiple off of a Larry Chang tweet? Not great, right? So what do? You go with a conservative multiple. You go with, all right, what have they done? What are their actions? How long can they keep this sort of capital and debt raising stuff? How can they do this? Now we know that a big reason why they can do that is because of all the legacy crime, right? And you can't, like, can they keep growing? Can they keep doing capital raises on the back of, internalized legacy crime? Maybe. But as an analyst, can you put that into a growth multiple? Probably not, because you don't even know how that works. So as far as like, going below this kind of cash floor thing, yeah, I guess it turned out that that doesn't matter as much. Why is that respected? Right? That's number one. Why is that respected? I don't know. It just seemed like that was the case, right? Like when I came up with this 2x, basically this like 2x, the original thing I said was NAV, so net asset value. And then that turned into 2x cash. Some people started saying 2x cash. Or we started calling it 2x cash, net asset value, right? So cash like securities, treasury reserve stuff. So like Bitcoin's not cash, but it's kind of like cash. Treasuries aren't cash, but they're kind of like cash. So, so we can call that net asset value. If you want to put in like inventory, like I get, does that get factored in? I don't even know if you factor that in really when you're doing evaluation. So yeah, why was that respected? Don't know. Historical reasons? It seemed to be the case. Like that's all that it kind of looked like to me in these moments when we bottomed out, and we bottomed out at this 2x NAV or 2x cash floor. We just did. Did we do that? That's the thing too. If we look at the chart, let's bring the chart back up here and make it a little bit bigger. We look at the chart here, like 2x cash, like that's the thing. This was like 3.3x cash at $10. This was like a 3.3 like price, like book value deal here. And then we raised a bunch of money, and then it was here, and it was slightly better at 1750. And then we raised more money, and it was slightly, better here. But it just didn't go below that ratio. Like I think the biggest discount that we had was here at 2034 at the time, because we had 4.6 and no debt. I think it was like 4.5. So let's do, how many shares are outstanding? I still think we had 447 mil shares outstanding. Yeah. So back here in October, last October, 2x net asset value floor was 2013, $20.13, and we didn't get down there. Back here, this was before, so we had 407 and we had 4.2 billion in cash. Or was that back here? No. It's actually higher. But this was before, I guess this was before, no, this was before the offering closed, right? Wait, did we have 4.2 or do we have 4.0? Maybe we were 4.0. Yeah, I think we were 4.0. Yeah, we were 4.0. Right, so we went down a little bit below it back here because that was 19.65, and here we're at 19.4. So we went a little bit below it, but 20 cents, or less than 2% below it. Back here, 2083. We were a little bit better. So we added like 200 mil. So I think we were at 4.8 billion. No, we were 4.7. Then we had 447 million shares outstanding. So yeah, we went a little bit below it back here during the second bond offering because our cash flow was 2102, 2x cash flow. So we didn't go below it. Here, same thing. We picked up a little bit more money, but then it got a little weird because of the convertible bonds. And so part of what might be messing with us at this point is they may kind of be factoring in the warrants as dilution already, because that's the thing. Like if we do full dilution, let's see, if we were to fully dilute just the warrants, that would be, I think they're 59 million. So that takes us to 506. So because they've already been issued, let's do, what was our floor today? 2095. That would put our market cap at 10.6 billion. Still pretty good. So, but that seems wrong. Because where are they getting that? If we have 506, we have just our cash right now, I think, is 9.2. Yeah, it's 9.2 billion. So let's divide that just by the current shares, and we get, yeah, we get 2060 as our cash floor. Is that right? Yeah, we get 2060. Where are we getting? That's just if we do the cash, but if we do two, right? If that's pure cash, that's not treating that as debt. If we double that, it's $41. But it's not the same as doing an offering. So free cash right now is 4.8 billion. If we divide that by 447, multiplied by 2, we get 2147. Ah, right, because we had some Bitcoin depreciation. Yeah. So we did go below that. What if we take out the Bitcoin? If we take out the Bitcoin, then I think a little bit lower. But what is this? Let's divide this by, how much lower we go? 50 cents below this? Yeah. Just like 7%. 6-ish, 7-ish percent. So I don't know. I don't know what's going on there. I think maybe some of it just needs to be chalked up to some like market inefficiency. Um, we've been speculating on swap theory for a long time now. We don't know how many of these things are out there. And again, this is theory. Like, I would say one of the things that was different, let's say, about swap theory for March was that we had some smoking guns. Like we had, Metro Ballin, for example, who was looking at some cool swap stuff, found a bunch of awesome like swaps, like found smoking guns. And so it was like, oh, well, I wonder if those are going to affect GameStop's price. And if you bet on those dates as lows, like the 11th and the 28th and the 31st, then they came into play. So like the deep lows, right? And that sort of, like Richard came up with the star idea, which is like tracking lows to lows, and thought they were swaps. And I had come across Metrobon's data, which said, hey, these things are this was like, I want to say this is in like December, before like I started talking to Richard. And then I started paying closer attention to some of his videos and what he was talking about with the star theory. And some of the dates that he came up with, because he came up with the 11th and the 28th, doing the star thing. And then I was like, oh, hey, these dates are also big dates with big notional expiries um, in Metropolitan's data. So like with that, that seemed really likely. Like to me, I would say, okay, I've only ever had that one set of swap data line up with those stars, which makes it hard because you know it does suggest that swaps are in play when we have these deep lows, like crazy deep lows. But exactly what that looks like, we're not sure because we're not looking at swap data. I don't have the actual swap data to tell me that. Got very lucky in March to have had that data in January, right? To have been able to see that. Um, so maybe that's a long way of saying I don't know. But maybe swaps. Hey there, Brian. Brian's asked a question here. Oh, excuse me. About selling calls on call walls. Um, what have I done historically? So looking at the net call gex wall, if you look at where it is like composite for your particular OPEX period, um, your safest one is going to be the one where it's going to be the biggest one. And usually the biggest one is going to be something like 25. It's usually going to be 25, right? Because we have these kind of macro brackets. When we're above 25, it's usually 30. Not always, but it's usually 30. When we're below 25, it's usually 25. So 27, because it does look like it's tied into some of the bond stuff, also has like a nice kind of element to it. And I think that's why a lot of folks target 27 as where they're selling a lot of calls. So that kind of takes on that characteristic. Keep in mind, right? Um, you know, what worked a year ago is going to behave differently than now. What worked a year ago, there were no bonds, there were no warrants. Um, it's not the same. The environment, the background is not the same. Stuff's been clouded, stuff's been gummed up, stuff's been reconfigured. The fundamentals of the company are different. Our floor stuff, although it doesn't actually look that different based on what we saw today, um, you know. But I would say, judge your risks. Understand that the difference in risk between a 25 and a 27, and take a look, let's say, at the difference in premium and judge whether that difference in premium is enough for you to take on that extra risk, because that's what the premium is for. You're being paid to take risk onto yourself. You're being paid to take risk off of someone else and put it on yourself and deal with the psychological experience of managing that risk, however you are able to do that, whether it's sweating it out or working hard to make sure that you're hedged, and et cetera, et cetera. Either you're using brain power in one direction or in another direction, but you're using it. That's really what you're being paid for. And so take a look, right? Take a look at the difference between selling one at a 25 and selling one at a 27, and say, is that, how will I manage the risk at 25? How will I manage the risk at 27? Is the risk at 25, is the experience of managing the risk at 25, is that worth having that extra premium versus what the 27 is? If the answer is yes, then sell the 25. If the answer is no, then don't. Right? That's how to make that decision. Nice, Rob. Yeah, I'm gonna say closing price 21.50 plus or minus $2. So flash gold. I don't know if I want gold. Oh, like my color? my potato color. Yeah, yeah. Um, Joe Caps, yeah. What's my interpretation of the last 3 days price action? I think it's got to be another swap. Uh, I don't general. The market's not that weak. Like people were talking about this, they're like, I don't know, market weakness. I was like, what? No, it's not. What? It sold off like $10. Like, what are you talking about? Like, let's look at swap. Let's look at SPY right now. It's like, no. I mean, that's something. That's not nothing. End of October, we started getting these days here, and we sold off what? What was our high? All-time high is 689, so almost 690, and we're looking like we're going to close at 670. So that's not even. That's slightly over 3%. SPY's down 3%, so we dig through our cash floor. I mean, it's not the best, right? We talked about this a lot. This used to be, looked like it used to be an important factor, was having a good context for what was going on in the broader market. But XRT's been way weirder. In 2 weeks, they redeemed. Yeah, XRT's been way weirder. I would look at XRT being weird as more of an indicator than say broader market stuff. Because look at XRT is way selling off versus the broader market, right? So XRT right now is at 79, also having a green day. Look at this, and it started to go down basically right around when we did. So we got all the Trump tweet action on Monday, and then so we went up a little bit. I mean, we went way up, and then we came down here. So I wouldn't be surprised if we just got like super shorted as a result of, or a lot of selling, price down because of this whatever happened here with XRT. Right. And XRT's been selling off since the rate cut, honestly. And then it traded up actually into GameStop dividend, and then it sold off hard. But it recovered when we didn't. But basically, over the past 2 weeks, they were up close to 8 million units outstanding. They redeemed all the way down to 2.4. Now they're all the way back up to almost 8 million units again. Look at this. Right? Look at this. Where are they? Yeah. I just refreshed. I refreshed the screen from a couple days ago. So they're creating, redeeming, creating. They're creating and redeeming three times, 65% of the fund each week. This is wild. This is an interesting idea from Run Frippy. Any merit to the idea that they are trying to time a GME upside with a macro down move in order to blunt a larger move to the upside by kicking a little longer and delaying FTT data? Yeah, we do have that. We still don't have the FTT data, huh? I think so. Right. Nope, doesn't look like it. Yep, missing for 7. They did this in 2023. It's the last time this happened. They're not releasing it today, obviously. They're not releasing it tomorrow. They're not releasing it on Sunday. So come Monday, it's going to be missing for 10 days unless they decide to release it then. It's a week late. And just so you can look, right? 1 day late. 1 day late. 2024, I don't think they submitted late at all. Not even once. Oh, just one day late in February 24. 1 day late in December 23. But then October 23, 21 days late. So something's going on here. Something's going on here. Did we do this or any earlier? And then 1 day, 1 day, 1 day, 1 day, 1 day, 1 day. 2 days. 1 day, 1 day. And then back here in 21, they were doing stuff early. 5 days early, 5 days early, 4 days early. 2 days late, 1 day late. They were only 1 day late in January 2021. How'd they do that? So they just don't do that. Like 2020, they were late a few times, but 1 day, 1 day, 1 day, 2 days, 1 day, 3 days. 1 day in December 2019. So they don't do this. So what is going on? Oh, but then we go back December 2018. They had some issues. Yeah. What's up, dog? Can I pet that dog? Yeah, there's a little bit of stress, especially regional banks. Ryan Cohen, I remember said something. I came across this tweet of his like back in 2023. Somebody reminded me of it today. That basically the Fed policy was going to have to take two things into account. Either the Fed could fight inflation, or the Fed could deal with banking liquidity. So it could be in part, despite the bombastic stuff from the White House on cuts, that what we could be seeing is maybe an attempt to head off this expected issue with banking liquidity. Could be. Because as you bring interest rates down, you do some QE type stuff, that's going to create liquidity for banks, I guess. Oh, interesting. I must have an outdated version for the gold on Lenny Gobble. Hey, what's up, Dayswag? Good to see you, man. Hey, Sonny, what's up, man? That's quite the comment. Yeah, maybe I'm not on a potato. Maybe I'm just within the infrared glow of a brown dwarf. Sounds like a type of star. Ah, okay. To see the gold there. Okay. Those are good. Those are good. EMA, MACD, RSI, and price actions. Good stuff to see. Yeah. Yeah. Oh, this is good. Simple Rick already beat me to his own joke. Yeah. $16 coming up. What's up, Sharon? Never done options. Thinking about the wheel strategy. When the cycle is a good time to enter the wheel, get it rolling. So right now, it's a good question. Right now, what you would start doing is you would. This is an ideal time to sell cash secured puts, given that you want to target. If you're thinking about running the wheel, you take a look at a price that you would be comfortable, kind of break even, acquiring shares of the stock, and go ahead and with your cash, use that cash as collateral to enter into cash secured puts. So you'll get a premium essentially to wait to purchase the stock, right? So let's say you look at the price right now and you say, okay, I like this price. How much will the market pay me to not buy the stock right now? And am I okay with that risk of, let's say, missing out on entering right now, in exchange for guaranteed money to wait? With your shares with covered calls, I mean, now it's kind of tough because we're down low. Ideally, you want to run stuff for covered calls, with a little bit more juice, right? Because I think we're gonna, start moving to the upside. But let's say you don't. Let's say we end up moving flat, something like that. You want to make sure, targeting covered calls, you want to make sure you target a strike, number one, that you want to make sure you profit no matter what happens. So you want to pick a strike that if you get assigned, your shares are getting assigned at a price that you're profiting, right? You don't want to target a strike where you're getting assigned at a loss. Okay. So that's number one. And then number two, let's say the real reason you're selling is because you want to collect some money in the interim while you wait for your shares to appreciate. Let's say you really don't want them to be assigned, right? You can judge the risk, just like I talked about earlier. I forget whose question it was. About $25 versus $27 for call wall, stuff like that, right? You can use the call wall as a target. So, for example, November OPEX right now, call wall is $25. What's the premium right now on those calls? Yeah, they're 20 cents. Probably a strong chance that probably a strong chance you won't get a sign on that. You're getting 10 cents per week. Not amazing, but probably a good chance you won't get assigned on those. Yeah, based on the likelihood, let's say, of what would you say? Likelihood of the call wall being breached, something like that. Maybe we hard charge back to the upside here. That was kind of my original thought, right? I mean, I talked about this a lot. I thought, we'd have a decent chance kind of coming up out of here. But maybe they still keep us. It really does look like they'll still keep us inside of November OPEX, inside of 25. I would not be surprised. If we had to wait, I guess, until after. Let's see. Yeah. Hey, I'm glad you're here, man. You don't apologize for being late. Yeah, I saw this. So maybe we just start maybe we just start surfacing. Yes, I am in a submarine actually, K Dubs. Um, we've dug so low. We've dug so low as a result of our price action that I'm in a submarine. Yeah. U.S. Navy actually just released a new $2.6 billion nuclear submarine out of my home state of Connecticut. So good stuff. Interesting. Theory. Total net call OI causes a negative mechanical drag when there's no external volume. Total net call OI causes a negative mechanical drag. Interesting what you mean by that. Maybe you could elaborate on that for us. DMW 0531. Yeah, cool, man. Oh, some tin. Coal coming at us with some tin. The 69 moving average is 1 cent from crossing the 420 moving average. That's maybe the moving average cross was the friends we made along the way. Six, seven mentioned. Mr. Unlimited, what is my take on Becca Cat? Um, definitely a different different thinker, right? And this is something that this is something that's really important that I try to balance when I'm trying to think about stuff. You know, diversity of perspective has a lot of value to it. It has a lot of value to it, right? Because when you look at the world, you look through your eyes, and the greater the number of perspectives that you can learn about, that you can gain, that you can model, right? Um, that's kind of the chief scale of empathy is can you model the way that other people see the world, can you model the way that other people experience the world, and can you imagine, right, can you put yourself as an active player in that person's world while they're living through things, right? So that's kind of right, um, empathy theory of mind stuff. So diversity of perspective is very valuable. Number one, because it can help you expand that, so you can think sort of wearing different hats or wearing different clothes, something like that, right? Um, Learn new ways of seeing the world. At the same time, right? The more you maintain a relationship with someone who has some different perspectives, who has various people with diversity of ways of looking at the world, diversity of perspective. Um, they're going to be motivated to look through the world at through the lenses at which they commonly look through the world, and you have an advantage because you don't do that, and you're not inclined to do that. Now, what that means is there could be value out there that you cannot see, that you cannot perceive of, because you look at the world in the ways that not only you look at the world, but also the ways that you like to look at the world, right? The ways that we look at the world tend to also be the ways that we like to look at the world, for one reason or another, because they're familiar to us, because they've given us advantage in the past, because we don't have enough of a negative stimulus to do otherwise, because we don't have a habit necessarily of doing that, right? There's a lot of reasons. So, Beckett Cat is certainly very interesting because he has some different perspectives on the world, and so right there can be a temptation there to to entertain some of that diversity of perspective in order to see possibly what you might be missing. Um, what what I would say is some of that, right? Sometimes, right, some of that diversity of perspective can be a little can possibly lead you astray too, um, and maybe can offer certain liabilities, right? Because the more you open yourself up, yes, okay, you open yourself up to more potential value, but you also open yourself up to more potential risk. So, I looked at his background a bit. Um, who he said he was, sort of in some different areas. I found some incongruences there in a way that I don't like to come out and say point fingers and call people liars, anything like that. But not exactly sure what was true, what was false. Um, Potentially, right, there were some finance connections that were mixed in there. Again, don't know if they were genuine or not. Supposedly, he founded a high frequency trading firm that trained algorithms on biomedical stocks, like biotech stocks. And he had like 15 people he was employing and something like that. And he also knew like huge volume traders. Like he claimed to know traders who pushed 50 million in volume a day. And that he had back office connections at like a bond desk, which all well and good. That doesn't preclude you necessarily from being, that doesn't automatically make you like a bad person or anything like that. Um, he also a couple times came out and said that he was like okay with being kind of universally kind and open to people, even if they were outwardly and obviously dangerous. Like said those words exactly in a couple of different places. Um, some places said he had a PhD in computer science, but also wasn't sure to what degree that was true. Anyway, this was a lot of stuff. Wasn't really exactly sure what was going on there. So my opinion in that regard is that okay, he's got diversity of perspective, but to what regard can the information that he provides necessarily be trustworthy? I personally, I tread cautiously. That's all. That's all I would. That's all I would say. So, in general, I will say that to again, right. I don't mean to be going around firing shots or you know not trying to make anybody feel bad or anything like that. I would just say my own orientation toward that um, is that just for my own, let's say, personal risk tolerance, I would say that looking a little bit too closely, um, putting a little bit too much stock was something that seemed like a very risky investment. Let's say on my part. So I hope that's clear. I hope I gave that the right sort of picture. But I think that more or less sums up my outlook. I know, right? He went on and he did a whole thing where he bought a bunch of long calls and got a whole you know what I don't do, right? You know what I don't do, and no matter how excited I am, when I think we're about to be bullish, like I know how these instruments work. I know how they work. I've looked at how they work. I've used them the wrong way for like lots of times when I was getting started. I know what happens, and I know what happens when you think right. Another major issue too. Um, Another major issue too is like don't forget that we are watched. Okay, GameStop is the most it's the most scrutinized. It's the most heavily scrutinized stock in the entire market. Do you know any other stock that has like a 1.5 million person Reddit community? Do you know any stock that trends on X like GameStop, even when like nothing's really happening? No. So GameStop is being constantly monitored. If the community all of a sudden starts getting super bullish and you're like, oh my gosh, on this date, the stock will pump. Here is me buying thousands of options. You do it too if you want. Or, he doesn't even have to. I don't think he said you do it too, right? I don't want to put words in his mouth. But like doing that type of thing definitely does encourage people to do that. There is, it's sort of like the thing of like taking advantage, it's not the same as like actively deceiving people or taking advantage of them, but like if you do that kind of thing, there are consequences. Like there is such a thing as human nature and what human beings will do. um and so if you make that stuff really public and it starts trending, um they'll purposefully change their strategy so that you're wrong. There's a greater chance of that anyway. So I'm not saying it's Becca Cat's fault that we're at $20.98. No, that's not what I'm saying either. But be very careful. Like, be very careful with that stuff. Uh, I routinely remind myself that I know less than even I think I. Anytime I think I know something about the stock, even if I think I can predict something, if I think I remind myself that I don't really know that. I don't really know that, right? And unlike how confidence kind of works in the human domain, so like with other human beings, like in the social domain, this is the thing about confidence. This is the thing about confidence, extroversion, daring, risks. Um, in the human social domain, human beings respond really well to extroversion, confidence, risk taking. Like so, when you try to do something and like lead human beings or achieve some end in the human social domain, that stuff works really well to convince other human beings to follow you and to give you resources, right? Like that works in the world. It works when you're confronting wild animals. It works when you're in a fight. It doesn't change the probability that your options contracts will print, unfortunately. So my take overall is be careful. I suppose. Hopefully that clarifies that a bit. Yeah, Seth's got a good idea here with this. Seth, maybe you messaged me about this earlier. Somebody messaged me about this. But like PMO support was it? Oh my gosh, did we close exactly at 2150? We did, didn't we? That's very funny. Anytime we close on a round number, it's like crime. Crime. 2150? Crime. 2250? More crime. Ultra crime. PMO resistance. Yeah. Did we draw this? Maybe I drew this, right? So we have like a little PMO kind of support line here. Yeah, we're right there. We're right on it, huh? So maybe this means, we deflect off this PMO resistance line now. And we just start going up, eh? Can I make this broader? I'll make the chart real small. There we go. All right, we got our big boy here. Whoa. This is 2020. Yeah. Whoa. Almost hit that line. Can I adjust this? So it goes like. Does that do it? Do we go through this? We kind of dip below it a little bit. But hopefully we stop, you know. Hey, what's up, Tom Personal? It's working. Yeah, what is Bitcoin doing right now? Like, I mean, Bitcoin plays a role, but it shouldn't be that big. 103, yeah, it shouldn't be that much of an effect. Maybe we go to 91 down here. That'd suck. But yeah. Yes, Snoop Dogg is here. And has turned my camera into a potato. Yeah. Cheers, Cole. Thank you very much, my dude. Hello, Z-Bone. Nice to see you. Cheers, Sharon. You're very welcome. Yeah, I had like an order fill in the background that made the sound. Oh yeah, very interested. Whenever the FTD settlement actually does come through, that's the thing about that stuff. It's like, oh, it's definitely coming in. T plus 6 plus C35 plus T plus 4 plus or minus 2. If it's an ETF, juggle. Otherwise, can kick starts another cycle and it just gets backed up. And then we do another T plus 1, then T plus 6, then C35, then T plus 4. And unless we do another, and then we do T plus, which is very possible. Right? I don't mean to belittle that. It's just like, I think they created new ETFs specifically so they could do this. Like GME Y, GMEU, IGME. Like, they created 3 new ETFs this year for GameStop. What is it? Option strategy, 2x leverage, and then what does GMEY do? GMEY is a different. Do they do like spreads? This is yield max. So this is. No. Wait, what's IGME then? Is it 2 different yield maxes? This is Bitwise. Oh, no, they're both the same. So they use similar strategy. Yeah. So they can use those. They can FTD with those if they want. So, but it's just frustrating that they can just do that in that way and just keep this stuff circling. It's What's up, Kurt? Good to see you, man. Cheers, my dude. Thank you. Oh yeah, Kurt's been going through it just for asking, right? Just for asking if he could exercise his warrants. They suspended his account, right? Left Schwab yesterday if they suspended me. Oh yeah, you left them. Yeah, good dude. Yeah. Shame they do that. Lose a customer. Thanks, man. Yeah, I mean, that is the trade-off. You know? Um the trade-off, yes, it can be valuable, right? Because you can potentially see things, um you can see value that you wouldn't necessarily be able to see otherwise. But you have to be careful, right? Because sometimes, like, you don't want to see value in some places. You know, um, it's part of the reason, like, you don't keep company with, say, I don't know, if you're in, a great example is substance abuse, right? People who have different, not thinking of anybody specifically, but like, if you think about, like, why don't you spend time with people who abuse this or that substance? Like, why don't you, like, walk the streets of Philadelphia with, like, you know, uh, bath salt users or something? That's diversity of perspective. They've got a real diverse perspective, very heavily influenced by bath salts. Like, why not spend time with that person so you can get a better, so you can build a better model of, like, the world as mediated through bath salts. Like, you could discover the value in the world that's obfuscated by the fact that you do not alter your brain chemistry with bath salts. Like, why don't you do that? Because yes, if you did that, like, I'm sure you could figure out, you could find out what it is that about bath salts that just drive some people wild to just use them. You could find that out, by spending out a lot of time with that person. And I don't know, maybe for your life it is important to do that, but I think for most people, and why most people do not opt to do that, is because they do not wish to find the bath salt person value. They don't want to have that value because they can look at that person's life, or they see the way that person lives, or they see what valuing bath salt values does to that person's life. So they say, well, I don't want my life, right? I don't want my body, or I don't want my brain chemistry, or I don't want my relationships to be shaped by bath salt values. So I don't think I need to know. I don't think I need to have a, like, that deep of an idea of that. Now, okay, that's an extreme example. But it's an extreme, but the line is somewhere in the middle, right? The line is somewhere between I don't talk to anyone who thinks differently or sees the world differently than me at all, to I'll talk to literally anyone and always be nice to them, even if they're gonna cut my throat with a knife. Like, interesting. The line seems somewhere in the middle of that, is all I'll say, right? um like I said, right? He may have been right, right? Like, his model could have been good. It may have been correct. It may have, before it was made known, that may have happened. But by sharing it, it could have changed the fact that, Wall Street would have had enough time to pivot if it mattered that much. And apparently his purchase did cause people, did cause folks to buy enough options that it showed up on the tape. And it did look like there was a counter move to sell that off, right? To react to that for the same expiry and strike, I think, too. So he may have been right, but it may have changed because he let everyone know that. I don't know. And I don't know. I can't pretend to say that I know for sure this is how, I don't know. But there's a reason when Roaring Kitty came back, he already did all his stuff. Right? Like he made everybody look at all of his memes while he was busy buying calls. And then when everybody thought everything was over, then he revealed his position over on Superstonk, but it was already too late for anybody to do anything about it. I already made my move 35 minutes ago. That's the meme from Watchmen, right? One of the great things about Watchmen is Ozymandias is smart. He's a smart, villain, and he has everybody show up, and then everybody's like, "Okay, here we go." And they're like, "We're gonna stop you." And he's like, "Did you think that I would risk my entire plan on a fist fight with you, like in the snow?" Like, no, I already did everything. Like everything that I just told you, literally, it's already done. All right, it's already happened. My plan is, or I told you about it. My plan's already done. I did it. I already did the thing where I was going to blow up this device in Manhattan and make it look like Dr. Manhattan did it. I did it 35 minutes ago. So, like, you can hit me in the face if you want. I win. Like, but if you tell them beforehand, I don't know. It's a tough game. It's a tough game. That's all I'll say. Oh, Master C's 2149. I got 2150, dog. I got 2150 on the nose. Over on very funny. Oh, I don't know who that is. Has he though? Like, if you're shorting GameStop at $22, man, I'm not sure that's smart. Like, that's not a sick move, dude. Like, what? Oh, good question, Dazewag. What percentage are out of the money? Let's take a look. So calls, let's see. We have a total of, this is it's 106,000. Yeah. So we have 1,600 divided by 106,000. Yep, that's a second consecutive week with 99% out of the money. Close to 99%. If we closed at 21.49. That wouldn't affect it that much. I think. Check. Let me just check. Yeah, they're out of the money. Yeah. So. Oh, interesting. Yeah, I also have like the yeah, I have like a very high cost base. I mean, there's a really high cost basis on mine. FMV. What is FMV? I don't know what that is. Because it was over 15%, that counts as a major distribution and assigning cost basis from shares to the warrants. GME has to file a form 8937 and clear up the cost basis issue. Hopefully they don't. Buying the warrants, what do I think of them buying the warrants now and exercising them at 32 a share to satisfy the FTD settlement due right around now? They could do that. They would be giving the company money, so we would be able to see they'll probably be able to give us an update, like a running update in a couple weeks if anybody's exercised anything. They'll be able to tell us how many people have exercised the warrants. Probably won't be equivalent to. I don't know if they have to necessarily do it like earnings. Well, they'll probably do it separately, so it's not going to be in the report. It won't be in the report until March. So, end of March, that's when we'll know how many of these have been exercised and what cash is like. So, 6 months, they can do whatever they want with these things. Nobody's going to know. Maybe they give us an update, just kind of a separate update, but we're not gonna know until March. Do I remember Newton shit posting last year on X? It was not as extensive, if I remember what he was doing now. I do remember he posted a position like YOLO thing, and he posted it was the first time he posted the Babe Ruth meme. I don't remember. I don't remember it being this extensive, and it certainly didn't begin with following and reposting and DMing people an account of a crypto scam. So that was definitely an element that threw me for a loop. I'll say that. So no, so that wasn't exact. It wasn't exactly the same. Wasn't exactly the same. I will say that. Thoughts as to why GME warrants and GME price are not following each other relatively. So the warrants are going to be priced like October options for next year. So we look at October 26, $32 calls. The spread right now on the $32 calls is the bid is 274, the ask is 305. For warrants right now, price is 290, so smack dab in the middle of that, actually. So they are being priced according to Black-Scholes Merton, and how Black-Scholes Merton is currently pricing the $32 calls for October. So that's what's following. And those do roughly mirror each other. Yeah, Schrodinger's calls with with the posting your call positions online. Yeah, probably just a good habit. Probably just a good habit is don't come out, and especially if you're going to open a big position. Because 3,000, for example, 3,000 contracts is a lot. That's a lot. Especially if a lot of people listen to you or follow you or buy with you at the same time, it can matter. Not saying it definitely did, but be careful. Running away from me here. Yeah. Yeah, the warrants. I don't know what it is about the warrants, but they have gone to town for a solid month, right? For a solid, really 5 weeks. We've just been down, 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 and closing below max pain. That's right. They did not like the warrants. It also messed up the options market. I don't know if you guys noticed. Maybe I don't know how much volume you do or how closely you look at spreads or liquidity or stuff like that. The options market hates the warrants. It was bad for the first 2 weeks too. It was super bad. So that's what I was talking about when I was like thinking about how like earlier on in the stream how we were thinking about premiums. That probably messed with it too because a lot of options volume disappeared. Right, folks just stopped trading it. Yeah, cover call premiums are not as good after warrant issuance. They're not as good. I mean, I would say, think about this. I'm not giving advice. I'm not a licensed professional. I'm not a tax professional. I'm not an accountant. I'm not a licensed professional accountant. I don't give people tax advice. This is not tax advice. I'm not telling you how to do your taxes. Consider the influence of various cost bases and when and under what circumstances you sell instruments of a different cost basis at various times and how that might affect when and in what quality or quantity you may or may not be beholden to pay tax based on those erstwhile returns on various portions of the position as a consequence of the posted cost bases. That's what I would say. If that makes sense, right? There is a thing in trading called tax loss harvesting. And this is where, when you get close to the end of the year, you take a look at your positions, because, right, what trades go down at what portion of the year, how wash sales get calculated, right? Again, I'm not a tax professional, so I don't know necessarily, but you can strategically exit and re-enter, let's say, portions of your position or different instruments. Let's say you have, in depth, you have different instruments that you use to trade. And maybe, overall you're up, but some of those instruments are down, right? You could hypothetically, depending on how your performance was earlier in the year, exit some instruments at a loss and lower in a particular year how much in terms of capital gains you'd be showing as a result of your trading and investments. That can help you in the short term, in the sense of, being able to deploy a different proportion of capital, let's say earlier, right? Because if let's say you push taxes back or you push taxes out, right? Overall, you may end up paying more, but that's as a result of having been able to use funds earlier in order to take advantage of certain opportunities that may not be there later, right? So for example, if you can tax loss harvest something now, get GME at a great price, and then 5 years down the road, okay, you sell and you're paying a bit more in taxes because you've sold at a profit there down the road, and there's a higher gross total of profit that you've made, so you're going to pay more in that sense. But you wouldn't have been able to have gotten to that higher level because you wouldn't have had the capital earlier on, because you would have given it over in tax, right? So there are ways that can work out. It works out for the federal government too, when you're paying these taxes, or state government too. As long as you're a good investor, it's better for them that you pay taxes later, because they'll get more money than if they take it sooner and not invest it. Something like that. Not advice, again, but some things to consider. If I had to cook a GME themed meal, interesting question. A GME themed meal, what would I make? I feel like the only answer is tendies. I feel like that's it. Carrots. I've never sold any GME ever. I never sell anything. I've never made $1 in trading ever. Tendies and banana pudding. Very good. Very good. Oh, that's great. That's great. Sir, this is a Wendy's. Very good. Yeah, so, I think there still is some chance we see some recovery into the mid-month. Might not be crazy. But yeah, there's a good chance we see some recovery. Back up into the, it's not going to be exciting. Maybe we go back to 23. That'd be exciting. That'd be a good day. See 23 again. We're never going to be, after seeing 2098, I don't think anybody's going to be as happy to see 23 as us. If we get to see, come on, it's going to be like $1.50 up. It's going to feel awesome. We're going to be doing great. We go up, we go down. We do a little this, we do a little that, right? take advantage of this situation, position, reposition, you know, every little bit edge counts, right? Get a percent here, and then when we finally do go up, that stuff matters. Every time you go up, even see, this is actually the thing that's been very heartening. Progressively, like the highs in GameStop have gotten lower over time. Lower highs, higher low, or lower highs, higher lows. You know, dealing with these tighter ranges over time as we've gone, but like, you know, the account still goes up. What's going to happen when we actually do start going up and compounding and stuff like that, and we're not doing this range bound thing forever? It's going to be something, eh? How many more years of that do we have left? I don't know. Food for thought. Okay, I think we will. I think we'll end the stream there. We'll end it with this great quote from Chad Schroy here. It goes up, it goes down. You can't explain this. Yeah. Thank you guys for a great week. Great questions. Happy to see everybody as always. I hope you have a great weekend. Yeah, looking forward to seeing what this second full week of trading in November looks like. First week was certainly a surprise. I think not what a lot of us had on our bingo cards, but yes, you know, great stuff. Great stuff. Always great opportunities. GameStop's always an opportunity. Still is a great opportunity. But look forward to seeing you guys on Monday. Yeah, enjoy the weekend, and yeah, let's go GameStop. We'll see you guys.